This week, Zillow announced that it was going to stop buying homes and close down its Zillow Offers division. Do they know something about our market that we don't know? We're going to break it all down for you up next. Hi, this is Chris Morton, real estate broker with eXp Realty in Raleigh, North Carolina, and we have some breaking news for you. Zillow is closing down their Zillow Offers division, laying off a quarter of their staff, and they're going to stop buying homes. Why is this happening? What happened to Zillow, and are they the canary in the coal mine of what's going to be happening to the housing market coming up? Well, let's go through all the details and let you know what exactly is going on. So most people in the market to buy or sell a home have heard of Zillow. They know that their website is really user-friendly and a great place to go to get information about homes, what's on the market now, what's recently sold, all of that sort of thing. And a lot of people actually just go to Zillow to look at the pretty pictures. So it's a very, very popular website. They've also created a technology they call a Zestimate, where they basically have an algorithm, a computer program that says, this is what a home is worth based on what we're seeing. And it's become sort of the word, the Bible of real estate going forward, in that people see that information and they think that is an accurate data point. Unfortunately, they used to call it an estimate, but they had to stop doing that because it wasn't an estimate at all. So they coined the phrase Zestimate. So it's really just a computer program saying your home is worth this, that home is worth that, et cetera, et cetera. The flaw in that is it's not actually a human being looking at a home and determining the quality of the home. And so it has kind of gotten them into some hot water with people over the past years. Well, now, about 3.5 years ago, they decided to start a division called Zillow Offers that would go out and offer you money to buy your home. They would give you an estimate, a Zestimate about what the home is worth, and they'd offer to buy your home for maybe even more than that. So let's say your home is really worth $350, that's what you're expecting to get. They would offer you $360. Sounds like a great deal, right? Well, yeah, it is, except they oftentimes would go in and charge you a fee to do the processing, all of that sort of thing, to get some of their money back. Then they would go in and they would fix up the home, your home, and put it back on the market for, let's say $370 to make profit for themselves. So while this has seemed to be pretty successful for Zillow in the past, that they are making money and being profitable and getting a huge division started, it actually had some net ramifications that were negative to both the company and to buyers on the outside. To the company, the negative was it was really just a house of cards. They were churning houses all the time and it looked like they were making money, or they were moving towards high profitability. They were probably just making a little bit of profit. And so it kept going and going and going, and unfortunately they got stuck with a stockpile of houses. For the buyers, the negative was that Zillow was oftentimes going after those starter homes or anything between $0 and let's say $400,000 in the Raleigh market, the Raleigh Triangle market, and that was cutting out opportunities for a lot of first-time home buyers that would normally have gone in and bought that $350 home that we're talking about. Maybe they would have paid $360 for it and done work on it, $10,000 worth of work, and been happy. Instead, they had to pay $370, maybe even more for that house, and then they were behind the 8 ball. So it was really cutting out a lot of opportunity for first-time home buyers. Further, in my opinion, they really got themselves into a conflict of interest by getting into this iBuyer program, which is what they're called, iBuyers. They are internet companies that will buy your home, fix it up, and then flip it to sell for a profit. To me, they got into a conflict of interest because they were telling people your home is worth this, then they were selling it for that, and they were kind of working both sides of the deal, kind of in an unfair way. They were both the buyer and the estimator on the value of your home, and that unfortunately caused a lot of problems for the market, and it definitely caused them to have to overpay for houses, and then in order to make a profit, they had to charge even more to the future homeowner. So everything seemed to be going along pretty swimmingly for Zillow until this week when it all hit the fan. They announced they were closing down their Zillow Offers program, unfortunately laying off a quarter of their staff, and they were taking the 7,000 or so remaining homes that they have on their books and sell them off to institutional investors for somewhere in the neighborhood of $2.8 billion. I suspect anything that the investors don't buy, they're probably going to have to sell on the open market at a reduced rate, which one would think would cause a problem with our market where the market may start going down because of that. So in my mind, Zillow made a lot of mistakes when it came to starting up this iBuyer program and investing in fixing up and flipping homes. Number one, they failed to understand that a computer program is not as savvy as a local real estate agent. You can run a computer program and it can tell you a home is worth this or that, but it doesn't understand the nuances of a market like a local real estate agent would. The Raleigh market is completely different from the Chapel Hill market, and it's certainly radically different from the Charlotte market, the Washington, D.C. market, or the Phoenix, Arizona market. Their algorithm did not account for that. Further, even in Raleigh, there's a radical difference between one neighborhood versus another, even one street versus another. Take Bedford at Falls River, for example, a neighborhood I'm very, very familiar with up in North Raleigh. You cannot say that a bungalow house in this section is a good comparable house to a Charleston style section in this part of the neighborhood, or a home that was built by Dries Homes, a very big giant home in the other part of the section of the neighborhood. It just doesn't work out. And for them to take an algorithm and kind of chop it up that way and be able to give zestimates, it just simply doesn't work. And in the long run, it failed them because they depended on that zestimate to decide what they were going to pay for a house and then what they were going to sell that same house for. And secondly, they failed to understand that in Raleigh, North Carolina and the surrounding areas, home buyers do not want a fixer-upper home. They want a move-in ready home. Fixer-upper home obviously means a home that you buy that needs new countertops, paint, flooring, yada, yada, yada. You get the point. Because of our shortage of labor in our market, it has become very difficult for someone to hire a painter, hire a flooring company, hire a renovator to come in and renovate a home. Zillow did not understand that. And beyond that, obviously, a lot of people just want to move in. They don't have the time to do all that work or become an amateur general contractor themselves. So Zillow didn't understand that. They thought that the algorithm told them that this house was worth this much money and all we have to do is buy it from someone, maybe put in carpet or paint, put it right back on the market and it's going to sell. And it didn't. Their home sat and sat for weeks or sometimes months, which if you know anything about the housing market right now, a home that sits on the market for weeks or months is the kiss of death. People automatically assume that when your days on market start ratcheting up, that there's something wrong with that home. And it doubled down on the fact that Zillow was going to have to sit on the homes because, again, overpriced and then long days on market, less and less people are going to be interested in seeing it. So again, as Zillow would buy these homes, they would claim that they were fixing them up when really all they did was maybe paint, maybe carpet. Sometimes they didn't do any of that. And so all of this was just a recipe for disaster. Homes sitting on the market a long time, homes overpriced, homes not fixed up. It was a recipe for disaster for Zillow. I know myself personally going in and showing a Zillow-owned home, and in fact, a lot of these iBuyer homes, the yards are not kept up, the house has got issues. I had one client who bought one that we had to terminate the contract because it was infested with termites. So these iBuyer companies are not even doing their due diligence by doing an inspection on the front end to determine if there's anything wrong, or at least it appears that way, that they're not doing that inspection. A lot of the time, the homes are dirty, carpets need replacing, paint is all beat up, countertops don't look good, cabinet doors are off, the whole 9 yards. It reminds me a lot of a home that's been in foreclosure, believe it or not, or is in the foreclosure process and is trying to be sold by a bank. So as you can imagine, this was a toxic stew that was doomed to fail, a house of cards that was doomed to fail right from the beginning. So now, what are they left with? They're now having to dump all of these homes on the market and sell them off and take a loss in their company. So it begs the question, what is the impact going to be on our real estate market or the nation's real estate market as a whole with Zillow dumping all of these homes. So you might be thinking to yourself, with Zillow dumping all these homes on the market, do they know something we don't know? Is this a sign of an upcoming crash that's going to happen and they're sort of the canary in the coal mine that's trying to get out early and save their butts? Well, when you look at it, what actually happened was Zillow made some really bad business decisions and they got a little too big for their britches, and now they're having to suffer for it. The fact is, what's happening to Zillow and the fact that they're getting out of the market is actually going to be healthy for the real estate market. First off, because obviously it's going to mean less iBuyer competition for those first-time home buyers out there to go out and buy the homes, and it's going to stop the ever-increasing ratcheting up of Zestimates that we're seeing when Zillow is buying and selling homes and increasing the price. You're going to stop seeing that as much. Not saying that prices in the market are going to go down, but the irrational ratcheting up that we're seeing from Zillow is likely to slow down a little bit or stop. And for the Raleigh Triangle real estate market, the good news is Zillow only owns 105 homes currently in our market. So that is really just a drop in the bucket about what our market has inventory-wise. As I've talked about many times, the Raleigh real estate market is in a massive shortage. It has been that way for a couple of years. And if they were to even dump all 105 homes on the market versus selling them off to some institutional investor, it's not going to matter. They would get quickly absorbed and we would go right on with our business. And to answer the question, is this thing's about to get really worse for the market? Know that Zillow paid on average, the median price they paid for their homes, I should say, was $389,000. They turned around and sold those Zillow owned homes for a median price of $399,000. So on average, Zillow is still selling their homes for above the asking price by as much as $10,000 or more dollars. And while this is not the case in other markets like Phoenix, Arizona, it is the case here in Raleigh and the surrounding areas. Zillow homes are still selling for a profit or higher than you would expect, and I think that will continue to be the case here for quite a while. And this just goes to show you how much stronger the Raleigh market is compared to most other markets in the country. Again, I think we're going to keep chugging along. And despite the fact that we're now getting into the winter months where you typically see real estate slow down, we're still seeing it be very competitive for buyers out there trying to find a home. And although it's better than it was a few months ago, you're still seeing buyers have to compete against other buyers and homes getting multiple offers. We have a ton of buyers that are in that $350 to $450 range, and they still continue to find it very difficult to buy a home, and we're still having to be very competitive, go over asking price and pay high due diligence fees in order to secure the home. So at least from my perspective, I'm not seeing the market slow down even now here in the winter months, and I don't think that Zillow, even if they were to dump all 105 of those homes on the Triangle market, I don't see that being an issue for our market. I think we will continue to absorb, and there's lots of people who are sitting on the sidelines that I think would jump in if they knew there was a little bit more inventory out there. So with Zillow pulling out of their iBuyer market, I see it as nothing but a positive for the industry and for the market. I think it means one less competitor for first-time home buyers. I think it frees up a lot of inventory for people and in general makes things much easier. I don't believe that they're the canary in the coal mine that is causing or that is showing that there might be some increase in disaster going on in the marketplace for real estate and that real estate prices are going to crash. I think it's just a natural thing that happens when a business makes a mistake. They have to write it off their books, and I think that's what's happening. So hope this has been helpful. Hope you've enjoyed this video. We'd love you to watch this one. I think you'll enjoy it just as much. Like and subscribe below, and we'll see you on the next one. Thanks a lot. Bye-bye.